Hello, America. How are you? Well, we're back for another fun-filled episode of the yoga stretch or the market stretch, the yoga of investment. Yoga of investing. Now, once a week, I like to get together with my friends, family, clients, online audience, and talk a little bit about the yoga of investment or the 1 week in the major indexes. We like to look at the major indexes, the Dow, S&P 500, and Nasdaq 100 to see how they are doing. Now, you might be asking, why these three indexes and not maybe the Russell 2000 or something like that? Well, I like these indexes because they are uniquely American indexes, and the Dow is actually the oldest of the American indexes, which is most highly followed in the stock market today. So the Dow started way back around the 1880s. I think it might have been 1884 or something like that. And nowadays we follow the S&P 500 and also the Nasdaq 100. Now, the Dow was started by two people and it's called the Dow Jones Industrial Index. Can you guess what their names were? Well, if you guess Dow and Jones, you're on your way. One of the person's name was Edward Jones, who was a brilliant statistician in his time, very genius man. And the other man's name was Charles Dow. And Charles Dow was a person who liked to follow industry. He's very interested in industrial activities in America. And this was right after the time of the Civil War. So these two men together were great educators of America and the American public. And they came up with choosing, at the time it was just 12 companies. Now it's become 30 companies, but 30 of the largest companies in America. And they like to follow how they're doing. And they came up with an idea that so goes these 30 companies, 12 at the time, so goes the American economy. And they had a little publication that they came out with. They were both newspaper men, and it was the Wall Street Journal. So the Dow Jones and the Wall Street Journal developed and they brought their message to America. So today we're going to look at the Dow Jones and see how it's been doing. We typically like to look at the 1 week, the 1 day, the 1 month, and the 1 year. So for today, the Dow Jones Industrial Average is down 0.16%. So if you had $100 in the index, today, tracking the Dow Jones, you would be down 16 cents. All right, well, not too terrible. I mean, you don't necessarily need to run out and sell everything. It's only down 16 cents. Hold on now. Because remember, when we're in the market, we're going to have some days that are up and certainly other days that are down where we're losing money. It's the name of the game, a little bit of volatility. For the 5-day, the Dow Jones is down 0.39 of 1%. So if you had $100, you'd be down 39 cents in the last 5 days. So not too bad. We've been in kind of an interesting time politically where, we've been in this little conflict with Iran, and a lot of people were wondering what was going to happen. Now, President Trump had promised earlier that Tuesday was going to be Bridge and Power Plant Day, and most people were very thankful that we did not follow through and bomb the bridges, all the bridges in Iran and all the power plants. Part of the reason he said was it didn't seem like they could get their act together. We didn't actually know who was leading the country and whether Iran could make a decision and commit to it. So I think the voice of reason has decided that we're going to hold back on that one. So everybody's praying. I think that this can be resolved soon with the least amount of casualties in the world. And we're hoping and praying that we can have a good outcome with Iran. Of course, President Trump is demanding that the nuclear resources be removed from the country and that they make a promise not to develop nuclear technology. All right. So anyway, in the 1 month, we're going to take a look at the 1 month in the Dow, up an amazing 6.74%. So that's really awesome for 1 month. In the 6 months, 4.29%. So that tells us the 1 month is up almost 7%, but the 6 month is only at 4%. So that means in between the 1 month and the 6 month, there was a down period, So obviously we're up a little bit more in the last month than in the last 6 months. In the 1 year, drum roll please. up an amazing 22.79%. So that means in the last year, if you had $100 in the market, then you would actually be up to $122.79 just for keeping your money in ETF perhaps that's tracking the Dow. So people who've been in the market this last year, did you realize that this market has been absolutely amazing the last year? If about 8% a year in the market is average, you might say, oh my gosh, we almost did triple that this year. Why aren't we hearing about this everywhere in the newspaper? It seems like everybody in the nation should be hearing about this tremendous news. Well, some people seem to be aware of it, but I would say the average person I talk to seems to be thinking that we've been having a rough year. Of course, we started off maybe about a year ago with the Trump tariffs, and then we ended up with this Iran war and Venezuela and all these things happening. But somehow we've been having one of the most amazing markets ever in the last year. From this Friday, April 24th, way back to April 25th last year, whatever day of the week that was. Let's move on to the S&P 500. Now remember, the S&P 500 is 500 of the largest companies in the United States that are domestic here, and they include those 30 Dow Jones. Over the last day, up about 0.8%. Now this is unusual because the Dow was down a little bit, and typically these markets, the market sentiment tracks correspondingly with Dow, the S&P, and the Nasdaq. So that tells us something has changed in some of these other companies that are included in the S&P 500, but maybe not in the Dow. Somehow the S&P is more robust at this time. Yeah, a good robust cup of coffee. One day, if you had $100 in there, it made 80 cents. 5 days, only up 0.67. So there's been a little bit up and down the last couple of days. More up on the one day than the last week. So the last week it was down a little bit for a while, but overall up 0.67%. The 1 month up an amazing 9.28%. So if you're tagging your performance to an 8% a year, we did more than 8% in just 1 month. Okay, in the 6 months, it's actually less than the 1 month. It's only 5.5%. So that means we've had some down periods in the last 6 months. So the 1 month's been bringing us back up, but over the last 6 months, we still did an amazing 5.5%. So pretty good. All right, now in the last 1 year, drum roll please, did we beat the Dow? Well, we ended up with an incredible 30.64%. So if you'd had $100 in the market for the last year, tracking the S&P 500, we're now at $130.64%. Amazing. As far as things going with an update on the Iran war, it's kind of interesting. We've been kind of in a stall right now, and we're kind of mitigating the ships going through or blockading what's happening with the Strait of Hormuz to a large degree. And one of our biggest trading partners, China, I love the Chinese people, but I'm not always sure that the Chinese government has our back. And the government this last week, they were a little bit surprised that there was a massive ship trying to come through the Strait of Hormuz. And that ship had in it, it was laden full of chemicals that are dual-use chemicals that had not only industrial use, but also had a lot of military use, especially for rocket fuels that can be used to fuel weapons of destruction. Of course, with the U.S. being in conflict with Iran right now, them sending massive tanker ship full of chemicals that can fuel rockets that could hypothetically be used against America doesn't necessarily give us the warm and fuzzy feeling with what the Chinese folks are doing. But, plausible deniability, it is dual use. Take it for what you will. It sounds a little bit scary to me. I wish that we could have a little bit more camaraderie and good feelings with our biggest trading partner. At least it used to be our biggest trading partner. I think they still are. Okay, for the Nasdaq 100 on the 1 day, incredibly, against all odds, up 1.95%. One of the largest jumps in a day for the Nasdaq. 1.95%. That means if you had $100 in the Nasdaq, you would have been up at 95. All right, makes me want to rush out to the Dollar Tree. I used to be able to buy things there for $1. Now everything's like $1.25, $1.50. Gosh. Okay, let's go ahead and take a look at the 5-day. Up 2.41%. The 1 month up an amazing 13.75%, more than you would expect in a year and a half if the stock market averages 8%. I'm not finding that 8%. We're still searching for that 8%, but this was up 13.75% in 1 month. So just for 1 month, leaving my $100 in a ETF, for example, tracking the Nasdaq 100, I could have made $13.75. I wonder what you can buy for that. I'm thinking maybe a Happy Meal at McDonald's. Well, you should call them unhappy meals at McDonald's, right? Well, okay, let's not get into that, but I'm not always sure the healthiest food. If you like McDonald's, don't let me bum your trip. It is hard to beat their soft serve ice cream when the ice cream machine's actually working, if it is ice cream. Okay, for the last 6 months, actually, we've seen that the Nasdaq only did about half the amount that it did in the last 1 month. It only did 7.67%. So that means 6 months ago, between 6 months ago and today, there's been a lot of ups and downs, but overall, we're still up 7.67%. Amazing. Now, over the 1 year, get this, the Nasdaq did 42.1%. This is incredible. So remember, about a year ago, the stock market was at a pretty low point due to the terrible Trump tariffs that were absolutely going to kill the market. But amazingly, even though we've had the tariffs, even though we've had these different conflicts, the market somehow is doing so incredible, more incredible than anyone ever could have expected. So leaving on this note, if you like this video, if you were surprised at the news, if you're thinking you might want to know something more about the stock market, feel free to follow us on this channel. Looking forward to giving you weekly updates every week in the yoga stretch, the market stretch once a week, checking out the markets. I do recommend, if you're an investor in the market, if you don't want to be too stressed out, but you do want to keep abreast of the changes, check in once a week and see how those markets are doing, and maybe see if your portfolio is comparing or tracking as well as the markets. Looking forward to seeing you in the next one. Please like, share, and subscribe. If you're on YouTube or on Facebook, forward this to a friend. Looking forward to seeing you next week. Thanks for joining me. Have a wonderful rest of your week. Take care.
Follow, message us, or scan the QR code on the screen to learn more.